Hey everyone, welcome to another episode of the MacroVisor podcast. I'm joined by my wonderful co-host Aisha and a special guest, a friend of MacroVisor, Sachin. How's it going?
I'm doing okay, man. It's been a pleasure to be here, and it's really encouraging to see the progress you and Aisha have made over the last few months.
Well, thank you so much for joining us. Really appreciate your time and the opportunity to chat with you. I know that you're making a bit of an exodus from social media, so we're really glad to catch you before you take some time off.
No, it's a pleasure to be with you guys. I think it's always great to hear from the macro views that you and Aisha share. I learn a lot from you, so I'm glad if I could contribute something back.
Well, you have plenty to contribute. You've got a excellent eye, not just on oil in the industry, but I've seen a lot of your other content you've posted. Of course, we met originally talking Palantir way back in the day. That dates us a little bit, right? But yeah, no. So this is great. Really glad to have you here. And so let's fire things off. Aisha, I know you have some questions that you'd like to ask, some areas you'd like to discuss. Why don't you kick things off?
Sure. So Sachin and I have been doing oil podcasts, I think, for a while now. So it's good to be back, Sachin, and let's sort of follow our old format of a free flowing discussion about anything in the oil industry. What do you say?
Let's hit it.
Excellent. So let's start off a little bit with what we're seeing in the demand side, right? So, like short term demand seems to have started to increase again. Uh, One of the reasons that we are seeing pressure on oil prices, I don't think, this year has been an interesting year, not just for oil, but for, global markets in general. And things have not really panned out the way we thought it would. China reopening didn't go the way we thought it would. Europe is having, a warmer summer. The US not refilling its reserves. So, plenty to talk about there. So, why don't we start off with China? What are your thoughts on China and the demand for oil overall?
I think I agree with you that the recovery in China is being a bit underwhelming. But my understanding is that it will come back on track. We will not see quite like a excessive growth in China, but I'm still expecting a growth of like 2.5% for this year and next year. So there will be some, at least China will not dump the market. So that's my base agenda or baseline about China. US is a bit different in that part. I mean, it will be glad if it stays, demand stays flat as best. I mean, given the current administrations and their policies in discouraging more oil use and more oil production, I think that could be the baseline scenario for that. But China, I expect that they will finally figure out a way to recover and to push some of the demand uphill.
So interesting. What do you think about the timelines, though? So, of this kind of recovery?
See, my understanding is that China will take another like 8 to 9 months before this recovery thing settles. And again, I mean, of course, it will depend how the real estate works there, what's the monetary policy overall there. Also, I mean, a lot of Chinese economy is dependent over the export. So overall, global demand also has to play in the China recovery. That is Europe and US primarily. Europe is a major concern, to be honest. US, I'm still expecting the economy to be flat or to improve from here. Uh, but Europe is a concern. In short term, I'm expecting the demand for oil also to get reduced in Europe because of their push for renewables and to move away from Russian oil and gas. Also, I mean the policy the way it is doing, but whatever demand we lose in Europe, hopefully in time that China and India will be able to overcome. I think one thing which everyone has to be very careful about is that uh, as of today, Europe and US use 40% of world energy. Okay, and a lot of time we talk about energy transition and we say, okay, the barrels will convert into kilowatt hours. But a lot of these models don't take into account what happens if the energy consumption increases in developing country. So, for example, I mean, if you compare the energy consumption in India versus energy consumption in US, the difference is, if in my head, is a factor of 10. So if India, the energy consumption per capita goes 2 or 3 times in next 4 or 5 years, there is no way renewables can fulfill it, and there is no way oil can fulfill it. So it will push uptake demand in mid to long term for actually both of them. In short term, I mean, the demand is going to stay healthy, but it may not be able to offset everything that goes away from US and Europe. And I think this is where the OPEC recent production cuts are trying to maintain this kind of a transition period where there is a less demand from Europe and US, and in the meantime the demand is kicking in India and China. And to be fair, I mean, India and China energy demand will go up. I mean, my understanding is at least if these two countries have to become world power, their energy demand should go 2 to 3 times at least per capita whatever it is today here. So if that happens, and their policies are also very simple, these countries are looking for affordable energy. Okay, they don't care whether it's a nuclear, whether it's hydro, whether it's a fossil fuel, whether it's renewables. They also understand that if it is a lot of oil and gas, then for strategic positioning it's not good, because they need to import a lot, so they'll always be dependent over the geopolitics between Middle East, Europe, and West in general. And it's difficult for them to balance their budgets. It's difficult for them in any kind of adversarial position that their choke points for energy import can be blocked, especially in China. Because China, I mean, in front in Pacific they have Japan, and if I have to come to Middle East, that's only one choke point that comes through the Chicken Neck through State of Malacca. In the north, if they move, that's the Arctic span across Russia. So it's not a good position for oil import via offshore, and they are well aware of it. So they need to increase their energy consumption, and they also need to figure it out that a lot of this new energy consumption has to come away from sources other than oil. However, it's not possible. I mean, oil consumption will increase in both countries, in my opinion. Okay, but yeah, I mean, there will be a lot of pressure to find other sources as well. But in due time, or the demand in China and India should offset whatever we lose in Europe and in US. That's my opinion.
Very interesting. So you think we're seeing a surprise in the GDP numbers, obviously, for the US, right? And this means that the US economy is still growing quite a bit. Now, we do foresee a recession, maybe a milder recession sometime next year. But up until then, we know that the US needs to refill their SPR, right? What are your thoughts about that?
So, I shall have to be very direct on this, and I don't try to be politically correct. The US policy about SPR has been a disaster. Okay, I mean, when 2020 COVID hit, they had excellent opportunity to fill the SPR at a very low prices. Okay, but that particular time when the idea was floated by President Donald Trump, the response was there's a lot of virtue signaling. The idea was that okay, they are doing it because they want to help a fossil fuel company. So my thoughts are very simple on this. You don't want fossil fuel company, you go and ban them. If you want them and you are using fossil fuel, then you need to figure it out how to use it in a more responsible way. So for that you need cheap oil, and that cheap oil was not filled. And then what happened is, like, if you go back to 2019, the oil price was dependent over the trinity of Donald Trump, MBS, and Putin. These three people and their equations with each other was pretty much was kind of counterbalancing the oil price. Now, moving forward in 2022-23, I mean, Putin control on oil price because of Russia-Ukraine conflict is pretty much gone. Okay, Biden has not effectively able to replace Donald Trump influence on oil price. I mean, he is not even able to manage the kind of relationship with the Middle Eastern allies that used to be. So pretty much it is opaque and MBS that is how to decide that where the oil price is, and they are maintaining it close to 80, which because it helps them in balancing their budgets, their economy better. So when you look from this point of view, and they also use SPR to release pressure during the oil price rise during the early part of the conflict, and now they don't have even reserves for, if I'm right, like 16 days or 18 days. It's a disaster. I mean, the word is strategic petroleum reserves. The word never says clean petroleum reserves. The word never says cheap petroleum. It's a strategic, and strategic means it is done for a purpose. So I'm sorry to say, but I mean, US has completely lost plot on how to manage the SPR, and they will pay a price for it, and they will pay a big price for it in days to come at some point of time.
Yeah, I think that's a really interesting point you made. I mean, the SPR levels are down at level. It's at a level we haven't seen since 1985. It's like you said, it's just over 2 weeks worth of supply, assuming there isn't some big increase in demand for some reason, like maybe some event happens and a lot of people want to go to want to leave the city or something. Who knows? I mean, there's all kinds of things that could drive demand for oil that are unexpected. And so, as you point out, we don't have enough supply here. I've heard in other countries as well that their oil reserves in European countries, for example, are at levels they haven't seen in 8 or 10 years, that they're also low. And it does come back to some degree to, like you said, this sort of idea that we can pretend our way out of an energy crisis. The fact is that we're going to be using petroleum and other hydrocarbon-based energy for decades to come, and probably at increasing global quantities. For the points you made, that we have other countries that are, coming into a more developed economy. They're going to be using more energy as they grow, and yet we're not really dealing with that reality. Does this structurally spell out over the long term, with the lack of investment in exploration, in production, and then governments sort of frowning, not just here but in many parts of the world, on any kind of hydrocarbon production, and then companies wanting to return capital to shareholders rather than do production or exploration? Does this kind of set us up for a future of more structural scarcity as oil is concerned for a decade plus to come?
So I think, Mehem, you're absolutely right on that. So two things I think which we have to take in mind is, the first thing is, if you need to fill your tank, you need to fill your tank. So main thing is that in order to kill the demand, somebody has to fundamentally kill the demand, and the way to kill it is that either replace it with something or you just don't make it available. For some reason, the Western countries are opting for the option two. So that is one. The second thing is, if European countries and US doesn't take control of the production of oil, but they are still using oil. At the end of the day, it is more power to OPEC, because Russia is kind of hampered now. Of course, I mean, there are countries which still imports oil from Russia, for example, China and India. But the control of energy pricing from Western countries will wane. So that is one. The second part is, when you talk about transition, transition is a long journey. And if you are going to replace oil and gas with other sources of energy, we are talking of like hundreds of mega capital project, and these mega capital project has to be delivered on time, on budget, and with the kind of attainment they are promising. Okay, now how much confidence we have in Western countries to deliver mega capital project on budget, on time? The answer is zero. They haven't done it forever. So even if they manage to get everything done, what they are proposing, and even if they manage to do it in even in 10 plus year, like if they are saying we can do it in 20 and then 30, I would say that's a victory. Okay, they don't have that kind of mega capital project management support. The supply chains are not there. Okay, we are seeing the supply chain issues that are emerging nowadays in giant wind turbines issues. So there are a lot of energy transition that exist on slides and in Excel sheets and in policy documents, but when it comes to actually see the work behind it, that's not there, and people are not ready to acknowledge it. I mean, I am someone who has been for energy transition forever. I mean, it to me it is important, because until and unless you create this energy transition, okay, you cannot change the structure of the power in the world, and that's my view all the time. I mean, I said that you need to change the geopolitical structure of the world. You need to change how energy is produced and how energy is consumed. There is no other way you can do it. Now, if you don't do it, at the end of the day, someone has to pay for it. Okay, now is Western world going to consume less energy? Probably not. So at the end of the day, if East start using more energy, there is more demand than supply. Somebody has to pay the price, and to me it looks like that in that particular case, the Western world has declared so many parties untouchable. They have long walls of virtue signaling at this particular time. It will create a kind of a backlash, and at the end of the day, that will have an impact on the timeline of energy transition, which is sad.
Yeah, I 100% agree with what you're saying. And in 2021, we had the least discoveries of new oil resources in about 70 years. And yet, to build the transition that I'm fully in support of as well, we do need oil. right? We need to have an abundance of energy to start to unlock other kinds of energy. And it just doesn't seem like there's the effort to get that done. It seems like, if anything, there's the antithesis, as you said, this sort of will to fight against the inevitable. We're going to need energy to produce energy elsewhere. And yet there's this sort of idea of, well, if we just sort of imagine a bridge to the future, we'll somehow end up on the other side without doing any of the work.
I agree. I mean, energy transition was supposed to be a movement. It has become a cult. And when it's a cult, then you don't have to declare logic. You just say, okay, it is like this, and these are your testament. Just shove it through your throat. See, we need energy transition for very simple reasons. First, world need more energy. Okay, if whole of the world has to increase the energy capacity by 4, oil cannot supply it. So it's not just only about that, okay, we need to replace oil. We need to, the focus should be how to increase energy consumption per person, because if we see the prosperity per country, prosperity per society with the energy consumption, it's a very linear chart. You consume more energy, that means these societies in general are going to be largely more prosperous. So the way it is being done as of today is, can we use ESG and energy transition to create another soft geopolitical pressure, rather than moving towards, okay, we have to do it because all of us need to have a clean environment. So the face is different and the effort is different. And that is where, I mean, if you see that there is a lot of backlash. We see what happened with Blackstone. We see that S&P recently decided to drop the ESG criteria, and I know this in detail because last year I was working with one of the fund to launch one of the ESG fund. And the criteria was, there are a few people in Wall Street and Silicon Valley and a couple of policy institutes, they say this is ESG and end of story. There is no inclusive discussion around it. I mean, think from my point of view. I mean, like, if my client is in Indonesia and I show them ESG ratings of the company, and they ask me that why these few companies have high ESG ratings and they don't do anything different, and I say, oh, because they have shown endorsement for certain causes. Now, for them, those causes doesn't go them in their religious belief, so they cannot invest in those things. So, and there is no scope of discussion for these things. So if we want less volatility in energy, if we want more predictability in how the energy transition is going to happen, I think people have to be open to come to be more diplomatic and come to discuss things on table despite their differences. We used to do this. I mean, 60s, 70s, 80s, governments were coming on table and discussing topics which were very difficult, and they were finding out some way to move forward. But somehow in this current decade, we have become a society where to sit somebody who has a different opinion is just not thinkable. This is and energy industry will suffer because of it, because it's a global commodity, and it's a key source for economies moving forward. So let's see how it all plays out.
Thanks, Sachin, and thank you for being so blunt. It's good to actually hear from someone who speaks their mind about these things. Sometimes we think that we're the only people who are speaking our minds out here, so it's good to have a friend in our corner. I remember that you and I discussed shale oil. I know you have some strong views about it. I know, but there's not a lot that's been, being discussed about shale oil recently. And I think if you explain it really well, you know the industry. So what I'd like to hear from you is a little bit, like an explainer about, how shale oil works and whether it's, something that would be viable for us in overall.
Okay, I think let me just make it very simple, Aisha. So I think first part we need to understand is like why shale oil revolution happened, because that is the key part in understanding why we move, what can happen moving forward. So in subsurface, actually, you have to like super simplify. I mean, the oil is actually produced in shale, and then over the time, some of this oil actually transfer to sedimentary or carbonate traps. I mean, it moves out of shale, but so majority of oil still stays in shale. So if you have to ask me, like in general, that the shale has the maximum oil in the world, than compared to what carbonates and sedimentary basin has. So that's period. But the thing is, shale doesn't have permeability, so you cannot make it flow, and that's the challenge. So this is what we always say in geology, is that how to extract oil from source rock, and that became the kind of a holy grail. So there were different technologies that been used. Okay, you can frack, so there are fractures that can, so there were things in the sideline that always stayed, but shale oil never became a big thing before 2009. So there is something happened in 2007 in US, that is a change in the SCC criteria for defining reserves. And SCC expanded how you can define reserves, and it expanded the criteria to include the new and advanced technology based seismic characterization. And that time people don't realize because what it will make. But then also, like 2007-8, we had the financial crisis, and which is followed by extensive quantitative easing. Also at that particular time, like the oil price and the oil industry has a bit of shock due to so the pricing on the services, especially on the second tier and third tier companies, they managed to drop a lot. So there is drop in pricing in terms of directional drilling. The fracking become more commoditized. There are better ways to declare reserves, okay, and which has high impact on how the reserves in shale oil field has been determined. And then you have a lot of easy money that was coming from the QE. So think from, so the industry point was that unit cost of production for shale oil is high, so there is no point going after it. This is how Exxon was thinking. This is how Schlumberger was thinking. This is one of the reasons that the shale oil revolution started with the small companies, and they were like winners came later on, like Chesapeake and other companies. But there was a, what people don't realize at particular time, that the risk profile is different. So let me put it this way, that you can generate a $5 per barrel oil in different places, but to build that kind of project you need 7 to 10 years of investment. And then in like ninth year and 10th year you will start getting the oil. So your unit cost is done, but your cash drawdown is very high. So your risk profile is different, okay. And as an analyst, a lot of time we are so much focused on the unit cost. Now think from a very different model. Say you have a lot wide range. Somebody comes to you and say, I want to drill a well and test something here. If it comes, then we'll go and develop it, we'll share it. You have no exposure in that kind because somebody else is putting money. The person comes, it's a land well, he's using cheap technologies, he can cheaply drill 3 or 4 wells in $4 or $5 million. He established the reserves, he get a reserve audit, he used the new the criteria that SEC has done to recognize the reserves and reserve certification. Banks are ready to give you loan, so he knows that, okay, now I have to start producing. He knows what's the pricing look like for next 7-8 years. He knows what the cost of capital look like, and he can lock some of the returns immediately by selling futures in the market. So suddenly you created a kind of an arbitrage market for you, where you lock profit even before you start consuming and committing all the capital. So the risk portfolio for this kind of model was very different from a project where you are investing 50 or 60 billion dollar and the returns have to come, for example, in 10 years down the line. I mean, all we have seen some of the large FLNG and LNG projects that a lot of large majors have messed up. So the moment this model was established, now there was a big problem, is because you see that the way it is working, it's a bit dirty, cheap technology, small players. So a lot of oil and gas companies stayed away from it, because they take a lot of pride in deploying a new technology, advanced technology. And then like this kind of revolution happened, and between 2009 and 2013 it was completely out of everybody's. Nobody has seen that kind of oil production rise in US like forever. At that particular time everybody realized that what is happening here. And since then, like over the time, because market was running quite ahead of itself, like during the downturn, a lot of this acreage was acquired by larger companies, so the acreage is not as distributed as it used to be. So that kind of revolution cannot happen. Also, some of the premium shale oil basins have already been produced, and still there is plenty of there. And over the time the companies have become more cost efficient, there is more technology, there are more workflows, people have more experience. So shale oil still can add quite significant and quite reasonable amount of oil if committed. And at the end of the day, this commitment has to come now from large companies because they hold the most of the acreage at this particular time. The problem here is that they don't have incentive to do that, and that is why they are returning a lot of money back as a buyback or dividends, and that's the pickle. Okay, and you see, oil is $80. Okay, we used to say shale oil is $55-$60 per barrel. People make it even more cost competitive by moving it to 30, 35. Why it is not coming back? Because the policies are not in the favor. So at the end of the day, if you do not unleash the shale oil, okay, you cannot wean off the power of OPEC. See, only time OPEC has lost control over the oil pricing when there was an abundant shale oil. And then what happens, like if you are producing a lot of oil, then the oil price is less volatile. They are in a kind of a mid to lower range. So a lot of people at that particular point have no incentive investing in oil and gas company, and they think look for out, because if you invest in renewables, then you are getting low return but at a low risk. If you want high return, then you go to tech. And so basically what happens in that kind of a bubble, oil and gas companies are serving not any kind of investors, not high risk, not low risk. And that particular window becomes good for them for renewable companies. But we have now turned it around. We have made oil and gas companies very attractive for investors. Okay, so this is so I mean, I have a lot of belief in a shale oil and what it can do. I mean, I don't expect that it can create an impact like it did in 2009 2013 with that kind of rapid pace, but it can definitely help in changing the scenario of oil geopolitics if it is unleashed. Okay, and if somebody tells me that producing in oil in US has more carbon footprint than what you are doing in Venezuela, I mean, I can't believe it. Either you stop using oil and you say, okay, we stop using it, and if you can't do it, then you have to figure it out how to do it responsibly. Okay, so I mean, I'm a pragmatic person. Okay, I'm not a cult followerist. I mean, I wish we stop using oil and gas and fossil fuels in time, but not at the cost of jeopardizing the society and civilization as we know it.
Yeah, Sachin, I agree 100% with what you're saying. There are such good points, and it gives me an opportunity to segue in a different direction, but a similar conversation, and that is natural gas, because it does bring up conversations about shale and fracking. It also brings up conversations about the sustainability of our current energy grid, and really not just ours, but many around the world. If we're going to be plugging in more and more cars to it to charge overnight, and the other kinds of sort of upscaling and living conditions that we're seeing. And for example, in Texas, just last Sunday, the energy price rose to 800% of the prior day because of the heat wave, because of the grid's inability to keep up. And they're 44% of their power is coming from natural gas. So what do you think about where we are with natural gas? You know, there's a lot of denial about how important it is. There's a lot of people that are trying to downplay how much we need to produce to really keep things going. But it sounds like, you know, this is another fuel that we're not going to be able to get away from for at least several decades. If we embark upon that renewable transition, natural gas is likely to be a very important part of it. So if anything, we need more.
I agree. I mean, actually, we should be using a lot more natural gas than we are using at this particular time, because first, it allows you to offset a lot of oil. I think the challenge that comes with the natural gas is, see, it's more inelastic. That means in order to create natural gas economy, the kind of infrastructure you need, the kind of commitment, the gas sale agreement, a lot more parties have to agree on that part. And you cannot just change it on demand, as we saw in the case of Russian Ukraine conflict, that Europe really struggled for it. So because it is more inelastic, then that means the volatility in the pricing is going to be much higher. And the only way you can actually offset the volatility if there are abundant supply. So it goes back to the same point that if you really want to ensure that you don't see these shocks of oil and gas, and especially in terms of gas, you need more resilient supply. And one way to have resilient supply is to have some, extra capacity in order to have it. And margins are not bad actually at this particular point. So if we are only producing and we are expecting that that whatever we have can cover the base load as well as the variable load all the time, that's fine. But the moment it suffers and there is no replacement, or there is no future roadmap that how to replace this, these shocks are going to stay with us. Okay, and my understanding is that in Western countries these shocks are actually going to increase, uh, because the plan, whatever they have and whatever I have seen so far in terms of replacing the or maintaining the natural gas supply, they don't look very robust to me. Okay, there is a lot of corner cutting in terms of timing and project delivery and execution. And someone like me who has done mega capital projects on oil and gas, these things don't happen as easily as they are shown in PowerPoint and Excel. So my understanding is every 9 months, 10 months we will have a shock like this. The price goes 800%, 2000%, and then it stays like that. And then suddenly after like 3 months it suddenly collapses. So it's very detrimental for the market in general. And when the market has a lot of volatility, the investors need return in proportion to that. If they don't get return, then they don't like investing in that. So overall what will happen is that the market sentiment in terms of investing in large scale oil and gas project, and predominantly gas and LNG, will go down. Then what will happen is at the end of the day you will see that government is kind of subsidizing and funding a lot of these projects. And when government does project, forget it that it can ever finish on time. So yeah, the gas shocks to me are going to stay continue, and every 6 months, 12 months, we are going to see a jolt somewhere in the markets at some point of time.
That's really interesting. But I think we're also getting like other pressures. What do you think about this new news that came out about Australia and the strikes and all of these things? Um, I know it's like coming out of nowhere, or maybe there was a history there. Who knows? But do you think something like this can continue?
I think it is going to actually increase. My understanding is that. So I think one thing we have to, and again, I mean, I don't want to be politically correct here. Let me be just as direct as possible. See, on the two aisle of the political side, there is one aisle. Their idea is that they use the energy transition, instead of doing energy transition, they made it a political weapon. Okay, that means everything is linked to it. On the other side, there is a large group which says that energy transition is not even needed. And unfortunately, both of these groups are leading in their political aisles. So, which leads a lot of dissatisfied people. There are a lot of policies, decisions are being made worldwide, which are not which are not well thought of. So, there is going to be a lot of backlash, and we are seeing that this backlash is coming in different forms in different countries. Uh, and it's to me it's going to continue. I mean, we saw what happened in Netherlands, we saw what happened in Canada in general. These kind of, and Australia is just a start of it. My understanding is if you do not have open channel and open discussion with people, and you can actually discuss with them how it is going to affect them, what are the incentives you are providing them, you just go and you say okay, it is like this, and just shove it through their throats. I mean, I'm sorry, people are not going to take it. If that is how we are going to do energy transition, and to be fair, Ash, I'm not a part of it, then energy transition is needed, but this is not how it is to be achieved, because neither of the party is actually looking for it. It's just a weapon for them to make some political ground, and at some point of time more and more people will resist to it. I hope it doesn't become kind of a negative connotation where people just think that energy transition or ESG is being used as a way to control them, because that's how it is turning out to be. And that is one narrative we really need to ensure that ESG and energy transition shouldn't turn into that. And at this particular point, it's a real threat.
You're absolutely right. I think more than a threat, you pointed out some important things, and I think we're already heading towards that way, right? Where we're using ESG more like a weapon than anything else. So you're absolutely right when you say that we should stand up to it. I don't know how we can personally, but definitely by talking about it more and making sure that people are aware, that this needs to be done the right way versus, just using it as, let's say a bargaining chip, So you're absolutely right.
So the one way I think at least we all can contribute is at least sharing our opinion, because the problem what is happening, like you go to social media, LinkedIn and all, I mean there is so much virtue signaling that even if people know that is something is concerning, they don't say it because it paints them in a bad picture. Because nowadays the world you live in, that either you comply 100% and you don't comply one thing, then you are the right winger. So because of that, a lot of us don't share their opinion, even though we understand that this is not going in the right direction. I think the first point to start with is that if things are wrong, somebody has to say somewhere that, boss, we need to change how we are doing these things. And I hope, I'm up for, like I said, I'm up for 100% energy transition, and I stated my reasons as well. But the way it is happening, I do not trust that people who are leading the energy transition mandate, they actually care for it.
I wanted to switch gears a little bit and sort of make this a little bit more actionable in the sense that we wanted to talk a little bit about where to invest. So, what companies you're looking at, if you are, and what companies you like, anything you want to, share with us, and you are able to share with us, that would be great.
I mean, like if you ask me about oil and gas, see, in OFS sector, I mean, I am always a big fan of Schlumberger. Okay, I mean, and I cannot say it because without any bias. I mean, it's in Schlumberger what you call is a blue blood. That means you stay in Schlumberger for a while, you get a blue blood around it. See, Schlumberger of today, and I cannot criticize the company because it's like family, and you have to wash your dirty laundry within family. But Schlumberger of today is not the Schlumberger of 10 years back. The DNA has changed. But even with the current leadership and current DNA, I mean it's a force to reckon with. Compared to, like, if you see in terms of portfolio of digital services, softwares, products, wireline, and everything, I think it is bigger than what you have in Baker and what you have in Halliburton. Halliburton and Baker literally has nothing in comparison to when you talk about the digital and the software portfolios that actually going to increase. Same thing. So in terms of like talent, in terms of margins, in terms of overall portfolio, it is still the leading company. So if somebody has to make bet in oil and gas companies, especially on the services side, my pick is always Schlumberger. And again, I mean, it's just my personal opinion. I mean, no financial advice, but Schlumberger to me is the player. And at this particular point, I think um, it has more upside because in last year rebranding, and I have to be very careful here because I was in part involved in that. I mean, especially in the digital and data part. See, Schlumberger rebranded itself as a technology company, and I mean, there are things which I cannot share, but I mean, I know a bit about the vision. When they say about technology company, that means in short that they are going to move out of oil and gas. So there is a growth path. There is a path of more investments in AI and data, and they have partnership with some really leading companies. I mean, they have partnership with Microsoft, they have partnership with Cognite, there are partnership with Data Eco, and I know there are some more partnerships about to come in days to come. So to me, in oil and gas services, that's my pick. Okay. Uh, when there is a So again, you have to also be careful that oil and gas is a momentum market. That means when make money, everyone makes money because it's a supply and demand thing. Okay, but in that momentum, my understanding is that services side, the Schlumberger will probably be in a better position. So now if I go on the operator side, see, I have to be very clear. I mean, if I have to pick, I mean, I'll probably tend to pick more Chevron and Exxon over BP and Shell. I think BP and Shell, and especially Shell. I mean, see, all companies are printing a lot of money if you see their numbers. But in terms of moving forward, the direction, I think Chevron and Exxon has a more clear direction, while BP and Shell is still trying to figure it out. How much renewables? Let's do more oil now. Let's do less oil. So there has been some back and forth that has been ongoing. Okay, these companies will make money. They are big forces, but in terms of clarity, I think Exxon and Chevron is my pick. There are other companies which I'm extremely uh, positive about, and there is this one company. It's not in oil and gas, but a sector linked to it, then this is uh, offshore off-wind installation. So large offshore farm installation, and there's a company in Denmark that is called Cadler. And my understanding is that Cadler will become Schlumberger of offshore wind installation. So this is a company to look for. I think they have one of the largest capacity, and everybody has committed that we will have so many offshore wind farm. And when you go and start looking, okay, who is actually installing it, and then you say there are actually very few company, and this company is actually leading the race. So if you ask me, I think their order book is filled for years to come. So that is one company I'm extremely excited for.
How do you spell the company?
It is called Cadelar, Cadler. It used to be Blue Ocean Swire. So it used to be the part of Swire Group, which is based in Hong Kong, which also owns Cathay Pacific and all. Later on, it was renamed, and it went IPO on Danish exchange. I don't know how much it is still owned by Swire Group, but my understanding is they still have a sizable stake in that.
So, Sachin, last question before we wrap up. I think we've taken enough of your time, but not really question, but your thoughts, let's say. So, you brought up something called you brought up AI in this, and my understanding about the oil industry is AI could actually be very, very beneficial for the oil industry, more so than many of the other sectors that we are looking at. What are your thoughts around that?
So, Aisha, I mean, I'll completely in line with you. I mean, my understanding is that AI, not only oil and gas in heavy industrial sector, okay, it is very impactful because, see, in large complex operations, there is a lot of decisions to be made, and decisions to be made takes time. Okay, there are different protocols, different authorities that has to approve it, and it takes time. And there's a risk profile that is attached with it, there's a cost profile that is attached with it. And you have seen that the ex CEO of BP himself has said that when they started deploying more and more data solution, integrated data solution with Palantir, they managed to drop their lifting cost from $14 to $6. I can tell you, a lot of these companies will die to do anything to get from $14 to $12. And this guy is coming and saying that we got from $14 to $6. It is completely unheard of. So there is the potential is huge. Okay, now the challenge is that in order to unlock it, companies have to disrupt how business processes are conducted within the company and how operations are conducted. And that is where the challenge is, because in order, so what is happening that companies need digital transformation, but instead of doing digital transformation, they are focusing on digitalization of processes. So that means doing the same thing but in a digital mode. And to me, that's a waste of opportunity.
So, it's not a real transformation.
It's not a real transformation, and they don't agree with it, and they don't hide it. It's a waste of opportunity. Few companies are actually managed to do that. And I mean, I have to take the name of companies like BP, of course. I mean, when you talk about the digital transformation in oil and gas, I think BP is way ahead of anything else everybody is doing. I think the company should look to them, and because they are figuring it out, like how to change the whole process itself. So until and unless you disrupt how business is done, how operations are done using digital and data, uh, yeah, I mean, it's just a whitewashing. I mean, you may get some benefit, but you are leaving large amount of money on the table. I mean, think about $14 to $6. It's a lot of money. If you are producing 2 million barrel a day, as a measure, I mean, that is like 16 million a day. That's huge. I mean, you can free that kind of capital. I mean, you reduce your cost of capital. You manage to have more activity in day to day in terms of your interventions that you do in the oil and gas field. Your reserves will have an impact of it. I mean, it's huge. So why BP can do it, why others cannot do it? Just because others are not focusing and working in the same way BP is doing. I mean, it's not like BP is special in any other ways.
Well, thank you so much. This has been a really great conversation all around. I've certainly learned a lot more about what's going on with the energy dynamics as they're present as they are at present and as they may play out in the years to come. So appreciate your thoughts and your candor. And I would just like to echo what Aisha said, that, rarely people do speak their mind. And yet these are important and often difficult conversations to have. And in order to have them properly, we have to be honest about what we're doing wrong. So it's really refreshing to hear that. I appreciate it. I know Aisha does too, as she said as much. But as we wrap up here, do you have any closing thoughts that you'd like to share with our audience, any wisdom you'd like to impart about what you see, and really just anywhere, anything that's on your mind that you'd like to share?
Maybe I think one thing which is on my mind a lot is, my understanding is that whatever inflection points we have discussed in terms of energy, in terms of ESG moving forward, I think the culmination of that will be the next year US elections, and whichever party comes, because their policies are so different from each other, that will have a very big bearing and how the energy market and how the ESG moving forward will look like. Unfortunately, both parties have views which are very which I mean, none of which I would say is right. Okay, but it will have also what happens in US next year, that pretty much will define what happens during this decade in energy and ESG. And that's one inflection point I'm looking forward, and I hope we see some good results. But let's see how things work out.
Yeah, fair point. And you could probably say that either way, we're probably going to have some difficulties to deal with no matter which side wins. It's going to be interesting. But I really appreciate you coming out and sharing your time with us and your thoughts with us. I think this has been an excellent conversation. I'm excited to share it with our audience. And then for people that do want to find you, I know you're taking a break for a bit, but you want to talk a little bit more about how people can find you. And then, of course, we can include some of that information in the show notes as well.
People can find me on LinkedIn. I will still be active a bit on LinkedIn. My understanding is I need to finalize which project I'm going to do next, and I'll be sharing some more information about that. I've taken like a complete social break from everything else. I don't have a lot of social media account, but Twitter is where I was a bit active. Anything else, yeah, I don't exist almost. So, but yeah, now generally what happens, like when you get into social media mode, there's a lot of discussion. Some people are very good at it. My view is that I need to get quiet when I need to do tough things. So that is the reason I decided to take break and sort it out, like what I'm going to do next, and then just get into my nerdy mode, shut down the room, and just get it finished. But I must still be on Twitter. I must still be on LinkedIn. But just a little less active moving forward for next few months.
Totally understand. Well, best of luck to you on your projects. We wish you the very best of success moving forward. And we hope that you can join us again sometime to discuss more about what's going on in the world of energy and beyond.
It would be my pleasure. And I think definitely at some point I'll join you guys back. It's always great to connect with you both and to learn from you.